Brian Shannon from alphatrends.net. Today's Friday, the 22nd of May, 2020. Hope you had a good week of trading. The markets did see some pretty good gains here, especially the Russell 2000 up close to 8%, oil up 9%. So a lot of strength in this market still. But the way that it occurred was all pretty much on the gap on Monday. And from there, we did make a higher high, but kind of settled back down where we started the week. The good news is we are still right at that rising 5-day moving average in this prior little band of resistance here on this 65-minute time frame is still holding as support for this week. So looking to the daily time frame, we're stuck just underneath that 200-day moving average still, and that is going to be a potential obstacle. We've seen that every level of potential supply has been obliterated by buyers. And if we do see some pullback next week, keep an eye on the volume weighted average price from this low right here. This was the test, of course, of the April low. And from that shakeout, we've drawn another volume weighted average price in. Currently, that ends up at about 291. So keep that in mind. But otherwise, the market remains healthy. If we see a pullback to that volume weighted average price and that doesn't hold, then we still have a cluster in here that has the potential to become support. The Nasdaq obviously has been the strongest market. This week it made another higher high to add to that pattern of higher highs and higher lows. It's gotten a little extended, and like these prior highs, we should expect that, not expect that, but it seems highly likely and reasonable that we can see some pullback. Now, the last couple of pullbacks have found buyers right at the rising 20-day moving average, so keep that level in mind. Currently, it's at about 222.5, 223. Looking to the intraday time frame, here's the 65-minute chart, and this market, here's the volume weighted average price from the low last week where we saw the shakeout. That would imply, if we get down to that level, a test of about 225. And again, we're still in an uptrend. There's no evidence here that the sellers are in control. So if you're shorting these little pullbacks, you're shorting with the odds against you. The definition of an uptrend is higher highs and higher lows. What that means is the sum of the rallies is greater than the sum of the declines. Therefore, mathematically, there's always going to be more opportunity in the direction of the primary trend until that primary trend reverses. And so far, again, we have zero evidence of that. Russell 2000, as mentioned, is where the bigger gains were found. We saw that this was a shakeout down at the 50-day moving average and undercutting this little low, and the big gap up on Monday. Again, we saw higher highs and higher lows throughout the day. Throughout the week, but it just kind of ground higher. Still above that rising 5-day moving average. I think the most important level we want to see hold next week is about 129.5 to 130.5. If it can maintain above that level, then again, we are still looking at a messy market, but still the path of least resistance is higher. Semiconductors also made a higher high this week. So it's, again, the same pattern here. We saw these higher highs and higher lows. Then we saw a lower high, but a higher low, and now we have a higher high to confirm that this uptrend is still intact. All the calls for a double top, and that obviously meant nothing. The 30-minute time frame here, you can see we're right at the 5-day moving average and holding at this prior band of resistance. We do have a pretty good cluster of volume weighted average price levels down into this 134 133, 134 level. So keep an eye on that if we do see weakness in the beginning of next week. But otherwise, I think you still give the benefit of the doubt to the buyers, as you do with the biotechs. The biotechs continue to hold on to these gains. They are up, close to all-time highs. When we look at the monthly chart here, you can see that on a monthly basis, at least, we are at all-time closing highs. And also, if we were to close here, this would be an all-time weekly close as well. So, it is an all-time weekly close, high close. The volume-weighted average price from this gap is what's been important this past week. So I would say keep an eye on that. It was tested 3 individual times after that big gap up. And the good news is, after this gap up, we did manage to close slightly above that volume weighted average price. So there's still buyers of these biotechs, even though they seem like they might be extended. The financials, if you recall, going into last week, I was saying that this is a potential level of resistance in here. And what we were looking for is the opportunity to sell short if it broke down from this level. Instead, of course, we got this big gap up on Monday, and the people who were early to the short scene got squeezed pretty hard. Now what we'll be looking for in these financials is kind of the same story. We'll be looking at the volume weighted average price from this low, which again did not get violated after that bounce, so there was no reason to be short. We'll be looking for that, and basically 21.25 to 21.50. If we can hold that, then this market will, looks like it's continuing to build a little bit of support in here, and that we have the potential that this is an inverted head and shoulders pattern. Now it's a messy one, but still, when we look at the daily time frame, that could lead to a pretty significant upside. From failed moves, we often see fast moves, and again, we did not see that this market really even pulled back at all, and we've got now a rising 50-day moving average. So I am no longer looking at these financials as guilty till proven innocent. I'm looking at them as getting ready to potentially break higher, and the only thing that would change my mind there is if it were to break below $21.25 per share. We have a long weekend. Hopefully you have a good, safe, long weekend, and I will talk to you next week. Thank you.